What are you doing?
Recharging myself.
Looks a lot like watching TV to me.
No, I'm not watching TV.
Come on, chop chop, let's go to work.
Oh, come on.
Wouldn't it be great to have a robot at home that generates passive income for you while you're out working your day job or having fun? Well, that concept is actually not that far-fetched. I've spent over 3 years developing a trading bot that fully automatically trades for you, no emotions involved. And in today's video, I show you how you can build a trading bot that can make you several $1,000s a day, and how and why mine all came crumbling down. So what is a trading robot? If you are familiar with trading, you probably already know what a limit order is. A limit order is an order to buy or sell a stock, or in my case, futures, at a specific price or better. A trading bot is basically a glorified limit order, like a limit order on steroids. It's a small program that checks for conditions. For example, if the train goes forward, do this. If the train goes backwards, do that. Based on its conditions, it will automatically buy or sell stocks, options, futures, or even cryptocurrency. Somebody even programmed a robot when President Trump took office that used Donald Trump's tweets on public traded companies, and based if the sentiment was positive or negative, buy or sell the mentioned company's stocks. As far as I know, the bot wasn't very successful because sentiment is hard to quantify and there just wasn't enough data. The recipe for putting together a trading robot is to look at several criteria or components that together build a solid and reliable system. But before we get into the different components, let's look at what we actually want to accomplish. What we want, of course, is to make money. But there are many ways to make money. You can get a lot of money with a lucky win at the lottery, but the chances for that to happen are very small. If you go to the gas station and buy a lottery ticket, that gives you a 1 in 13 million chance that your investment makes you some money.
So you're telling me there's a chance?
But that is not what you want from a trading robot. What you want is that your investment makes you money with a chance of at least 50%, better, greater, of course. We want to win more often than to lose. Ideally, you want a strategy that has a 65% or higher chance of winning. Let's say you win 60% of the time, $10, but you lose 40% of the time and you lose $20. You win more often than you lose. It's a win ratio of 1.5, but you still drain your account. The win-loss probability of your strategy alone is not enough. A lottery ticket of a $2 investment has a great risk-reward ratio, but a terrible probability. And that is why we have to look at the win rate always in combination with the risk-reward ratio. A risk-reward ratio of 1 to 3 is ideal for a trading strategy with a win rate of above 50%. If, for example, risk losing $100, you should be able to make $300 on a winning trade, and that way you can still make a profit if you lose 2 times and your third trade is a winner. So back to the components that we need for automatic trading. As with most things in life, keep it simple is a good plan to build a trading bot. If you have too many indicators or components, a strategy can look great in the testing phase but fail to deliver once you trade live with it. From my experience, it is best to stick with 2 to 3 indicators. The first thing we want to know is the direction of the market. Is it going up, down, or sideways? Are we buying or are we selling? For example, you can say if we break the highest high or lowest low for the first 30 minutes, that will give us the direction. Let's look at this using the example of a train.
Moving forward. It's moving backwards. Moving forward.
Hey, this serious and hot stuff. Only call me when the train goes at least 50 miles an hour. Get it? That's why the second component is a version of a momentum indicator. Usually momentum indicators are oscillators. If you throw anything up in the air, it eventually loses momentum and reverses. Oscillators track market momentum over an adjustable time period. In the example of the train, it takes a while for it to get moving, but once it is up to a certain speed, it's not that easy to stop or change direction because of its momentum. There are many momentum indicators, for example, the relative strength index. We also want to know if there's just a few people hopping on the train or a whole bunch of people. For this, we can look at volume indicators. There is a whole assortment of volume indicators available, and best to test several ones when putting together a trading bot. There are literally endless possibilities to put together a trading strategy, and it starts with picking the right time frame. Do you want to trade a 5-minute chart, a 15 or a 1-hour chart? But I don't want to get too deep into it in this video. Let's move on how we can optimize a trading bot once we have all the components put together. In this example, for a simple exponential moving average crossover strategy with 3 parameters, we have 420 combinations. Exhaustive optimization means to go through all potential combinations in search for the best results. Combinations go up exponentially, and brute force for selecting the optimal parameters using AI, even with the fastest computers today, can take hours, days, or much longer. Therefore, we use something called genetic algorithm optimization. I won't get into it in this video, but genetic algorithms are inspired by the theory of natural evolution to find the fittest individual for the next generation. Using machine learning, the system adjusts its parameters and simulates the buying and selling during the selected period of historical price data, in our case 10 years. It then selects a different set of parameter values and simulates the 10 years of trading. It does this over and over until all combinations have been tested. Using the performance summary, you then select the best parameter combinations depending on net profit, number of trades, winning trades, losing trades, average net profit per trade, and many other things. A very important number is the consecutive losing trades, as that can completely drain an account, and then it's game over. Now, if we train our trading robot on 10 years of price data, we won't have any data left for testing other than the live trading. That's why system builders use something called walk-forward optimization, where data gets divided into in-sample data and out-of-sample data. For example, 60 or 70% of the data is used for the system to learn the pattern. The 30% of the data is then used to trade on data that it hasn't seen yet, and then it's shifted forward and uses the 70-30% again. One of the biggest problems is over-optimization or curve fitting. Curve fitting is basically taking optimal inputs from the past and expect them to continue to work in the future. And it can lead to frustration to see your system not work during live trading. One solution for overfitting is using a mix of real and simulated artificial data for training as well as testing the system. If your GPS system does not update daily, it can show you a road that no longer exists. That's why in my system I had basic system parameters that I optimized once a year and parameters to include the latest daily market trends for fine-tuning. Using stop-loss orders seem to be the common way for traders to exit positions if they don't perform as expected. But if you ever placed a stop-loss order, I'm sure you have experienced it. The price drops, and as soon as your stop is filled, it goes right back up. There are rumors that the market makers move the stock to the stop-loss level and take them out. For that reason, I only use a threshold in my system. For crude oil it was $1,200, and once it goes past that, I will look if the trend is about to reverse or if it keeps on dropping, and would then generate a stop order or not. The mistake I made, and I'll tell you about that in a little bit, was that I did not have an emergency stop set if everything goes wrong. To increase profits, you can take, for example, a commodity with a high correlation. In my crude oil system, I would look at heating oil, and depending on its signals, I would increase the contract size to 2, and if all stars aligned, I would go in with 3 contracts. There are companies that let you trade with their money and you get to keep part of the profits. The problem is that most automated systems won't pass the strict regulations and rules these companies have. Not only did my system pass the 2-step process with their tight stop loss rules, where you had to make a certain profit during 5 days of trading, I had some amazing wins, with the highest being $4,700 using 3 contracts in the first 2 hours of the market opening that day. Of course, I also had plenty of losing days where I got stopped out by the stop order. But because the system I built over the last 3 years was so successful, I became impatient, arrogant, greedy, whatever you want to call it, and thought if I develop a portfolio of trading bots like this one, I can quit my day job. Except I didn't put the same effort in it. I skipped stress testing and traded live way too soon. A lot of consecutive losing trades took a toll on my account, of course. And then the final stab came when crude oil dropped to negative $37. I was in a long position, didn't have a stop order placed, and could not get out on time.
Take the first exit.
So the takeaway from my mistakes is, don't diversify just for the sake of diversification. I would have been much better off scaling up my working trading bot by increasing the contract size. Always have a fall protection in place somewhere below the calculated stop order, and this should always be a market stop order. There are many more mistakes, but to list 3, turn off your system during unpredictable events like war or a COVID outbreak, or even during the OPEC monthly oil market report. There is so much more to cover on this topic, like deep learning artificial neural networks for trading systems, robots trading against robots, and much more. Please subscribe if you liked this video, and let me know in the comments section about your experience using automated systems. Thank you for watching, and I see you next time.